Morning, everybody. It's the 19th of October. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate. All right.
Yeah, not bad. You?
Yeah, very good. Thank you.
Good. Okay, let's get stuck in then. So, headlines today: UK Prime Minister Boris Johnson promised to find a solution to Brexit's Northern Ireland Protocol, a sign that a compromise will be reached with the European Union in a dispute that has threatened to spiral into a trade war. Obviously, we're very bored of this, but it's still very much ongoing. Boris also did a press conference or an interview yesterday with Bloomberg, and he hinted at eventual tax cuts for UK businesses, even though Rishi Sunak is preparing hikes in taxes in April to cover the health and social care spending. So we'll see what happens there. Goldman Sachs has warned that the benchmark European gas prices could rise by as much as 70% from current levels as tighter than expected supplies from Russia worsen. And obviously the spectre of shortages over the winter. So that's obviously further concern. Yesterday we had Apple announce a revamp of its MacBook Pro, revealing its new homegrown processors that are meant to replace Intel's chips and that have powered its high-end computers since the mid-noughties. Last year, Apple started to transition to its low-end Macs to support its own silicon chips. So I guess that's the big deal coming out of the report yesterday. Also, they are unveiling a new generation of entry-level AirPods, which will be water resistant. In Germany, they'll let their state of emergency expire on the 25th of November, as the threat of COVID-19 is only moderate to people now. Just seen actually in the UK, the cases are actually higher now than they were this time last year when we were in lockdown. So it's still very much present, although obviously the hospitalisations and the serious illnesses are far lower as a result of, I guess, vaccinations and herd immunity. Markets are widely expecting a Bank of England rate hike in less than 3 weeks. There is a pretty thin economic calendar today, which we'll come on to shortly, and some important earnings as well. But we're going to get stuck right into the charts. Steve, anyway, you want to start off today on the chart front?
Yeah, I'll start off with cryptos. Actually, I've done a video. It's available on YouTube. Have a look at it. Yeah, Bitcoin, really interesting one. Obviously, that's close to its all-time highs. It's the weekly chart, and you can see we're projecting higher over the last 3 weeks. And this candle is stalling slightly, which doesn't look too offensive, but we do have this all-time high here, not very far away. Couple of thousand points away, which is nothing in Bitcoin terms. And yeah, I think we need to challenge that level and need to challenge it quite quickly because momentum is really slowing down. We can see this bearish divergence. The prices are moving higher. Momentum is slowing. We're in overbought territory there, and the candles, or the daily candles, don't look great for an extension higher, although we did see similar price action over the previous couple of weeks on the daily chart, that is. However, this is that my take on it is that we are going to challenge the all-time high, possibly take it out. We're going to get some euphoria over it. We're going to get people piling into it, and then it's going to be one of those emperor's new clothes situations where people it just doesn't feel like it will have the follow through that is needed to extend this much higher. Then there'll be a little bit of panic, and then we may see the correction. So that's what I feel is going to play out in Bitcoin over the coming days. So new highs. I mean, we can see the other coins, Ethereum, downward trending resistance line. We've tried to push above it, failed, and that looks to be capping price action at the moment. And again, on the daily chart, you can see the momentum is slowing down as we move higher. Same on Ripple. In fact, Ripple has turned into negative momentum over the last day or so. Cardano as well, very flat line on the momentum, neutral on RSI, and it isn't through the cloud either. So the other coins are struggling a little bit, and I think we just might get a little bit of a damp squib. Is it squib or squid? Who knows nowadays?
I think it's Squib, but yeah.
Yeah, I think it's Squid Games or Squid Games. Who knows? Oil, obviously, as Joe was referring to in the market highlights, that continues to move higher. No sign of it slowing down, and along with all the energy sector looking quite positive. Funny enough, I got my next year's gas and electric bill came through. The prediction is normally I pay about just under £300 a month, which is a lot of money. But my house is not well insulated, and they said I can fix the next 12 months from December at a really nice sort of like round price of £750 a month.
Wow.
Yeah, that is crazy. And then you sort of like you go and then look elsewhere, and they're all sort of like showing, you know, at least £100 more. So you know, 30% hike in my energy use next year. Even the if I just jump back to the variable rate, it's still around about that price. So yeah,
You'd be better off
doesn't look
buying
too good.
some warmer
Jumpers.
clothes and some higher togs on your duvets.
Absolutely, 100%. I was going to say that you're very much dressed the way I will be dressed next year. I'll be
Yep.
cutting down the gas and putting on warmer clothes.
Yeah.
I'm sure it's a plan to get us all to go renewable energy anyway, as long as the sun shines. So yeah, oil continues
The
to
wind
look
blows.
for higher ground. And let's take a little look, see if there's any levels. We're still in this bullish channel on the 4-hour chart, extending higher. We've just retraced from 83.11, had a little bit of a dip down to 81.11, so a little $2 dip. Seems like sort of like, wow, when we were talking about $10 not so long ago, yeah, that $2 was quite a big percentage move, but we're up at $82 now, and it's not that bad, a bigger deal. Brent still looking in within the channel, still looking pretty good. We've looked to have bottomed out a little bit and look to be pushing higher. Natural gas is actually under a bit of pressure, but I'm sure that Putin's little games that he's playing will lend a supportive hand to that. And we saw a doji candle yesterday and a bullish candle today. So that's a morning doji star formation on the 4-hour chart. So that's pretty good. And I expect to see prices move higher today and into tomorrow. Gold had a nice little recovery yesterday. You can see how well the Ichimoku cloud held on the 4-hour chart. The daily chart again projected this sort of morning star formation that looks to be forming now. Overnight, we've seen price action extend higher from about midnight onwards. Saw a nice little jump to about $17 higher move overnight. So that's looking pretty good. And yeah, next level of resistance is around about 1800. That'll be a psychological level and also a pivotal level before the 1834 level, which is the big resistance. But yeah, so feels like a little bit of potential recovery in this precious metals. Even silver is looking like a inverse head and shoulders formation. Support coming in around about 2318. One of our young analysts over the last 3 days has, last 3 trade ideas in silver has hit that really well, just buying that dip just in front of the $23 level, and they've all worked out. He's actually got a 100% record, Joe. 4 out of 4 so far. No,
really?
Yeah. What are we doing wrong? We should get him on here. Let's take a look at. No, I don't want to look at them. Let's take a look at indices. So yesterday's bearish outside candle on FTSE looks a little bit ominous. We've had a little bit of a rally this morning, but price is back to quite close to the yesterday's close, 72.07, 72 the close yesterday. A break below 71.80, and we should open up another move back, maybe towards this reverse trend line. Same on DAX. We ran into resistance in the Ichimoku cloud, and we formed a bearish outside candle, a negative start this morning. So that doesn't look great. We looked so good this time yesterday. Hangman candle on the Dow. These are all daily candles. Again, we've got, although Dow is like trying to push higher now, trying to challenge this Hangman candle. Really needs to break above and close above 35,350 to offset that. However, NASDAQ has looked pretty good. We've got earnings out, obviously, over the coming weeks. And again, a bit of an inverse head and shoulders here. So that potentially has formed. We can draw the neckline down here. Let's do it. That would be the neckline of the inverse head and shoulders, and projecting a move. Let's even see the projected move. just in case this does play out today. Yeah, projecting a move right up to the all-time highs. So potential for that on the Nasdaq. That's definitely performing pretty a lot better than the European counterparts. S&Ps as well, although this looks to be stalling ever so slightly. Not a great candle yesterday, a hanging man candle, but we have extended higher, so probably negated that. But we're above the 44,883 previous resistance, now turned to support, and looks to be really focused on this all-time high. Aussie 200, again, hanging man candle yesterday and the day before, so stalling. And China 50, I think we managed to sort of like buy the dip overnight, and it's looking quite nice in that so far, but the daily chart doesn't look so friendly. Looks like we are in a sort of temporary downtrend, maybe looking to reverse this great potential we've seen over the last week or so. Hang Seng bucking the trend in Asia and continuing higher, although running into resistance around the cloud. So let's see how it reacts around there. And Nikkei, very similar to the others, still got this challenge in this sort of cloud resistance. Really needs to clear the 29,285 level and close above there to maybe offer potential for further upside.
Lovely. Nice one, Steve. Okay, so dollar index is retreating from these resistance levels that we saw at 38.2% fib, 94.47, heading lower. First level of support I had was at 93.73, which hasn't held so far today. That was this previous higher from over here on the 20th of August. The next level down is this blue line, which is at 93.43, and then we start having the bullish uptrend channel marrying up at the same sort of level. So bit of consolidation, I think. I'm not overly concerned about it yet. If this channel breaks, then I would be concerned. I think that could lead to a deeper correction over the short to medium term. Obviously pretty stiff resistance up here that it needs to overcome in order to see a continuation higher. So just a little bit of a dip back, and obviously that's having an impact on all the other currencies too that it's linked to, most notably today euro US dollar, which has rallied back quite nicely. A big bullish engulfing that was posted on the 13th of August, and we've continued to move higher since then. We are now hitting, or very close to hitting, this low that we posted on the 20th of August, which should be a resistance level. Above that is another couple of resistance levels to target, and we also have a short-term downtrend. So in and around here, I would expect there to be a revisit from the sellers. The volume hasn't been particularly great on the move higher, certainly nothing that's sort of outstanding anyway. So we'll wait and see what happens in and around that level. Looking at cable, that closed back below the short-term downtrend line, but it's pushing higher once again today, far outstripping all of the losses that we saw yesterday and pushing nicely higher. So looking for higher prices there, up towards these resistance levels, up at 138.91. So looking pretty good on the cable front, but it has done a significant amount of work in a very short space of time. And again, volumes not particularly supportive of this move higher. So do be careful if you're considering chasing that higher today. Looking at euro sterling, that yesterday broke down below a very important support level. These previous swing lows that we saw from the 10th of August were taken out on an impulsive candle that was posted actually on Friday. We had a little bit of an attempt at rallying high yesterday, only really managed to get sort of half of the losses that we made on Friday, and there's not really much going on today, pretty flat so far. So not looking good on that front. I still think lower prices are probably likely, but given the steepness of this move lower, we may see a little bit of a corrective bounce before things take hold on the downside. Looking at some of the yen currencies, yen still continues to be very weak indeed. Euro yen pushing higher. Lots of green candles in a row now. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 green candles in a row. Steve will tell you they don't often see 9 in a row. So let's see how it closes today. We've got a measured move of this range that's broken, that comes in at 133.53. So that's the short-term target on the upside. Maybe it could be running out a little bit of steam here as it stands, but we'll wait and see. Aussie yen, similar situation, lots of green candles, now approaching a significant area of resistance up here at 85.45. Getting very close, and I expect that we may see a challenge of that today. Again, volume's not overly supportive of this big move to the upside, so do be careful if you're chasing that. I think maybe the safer move is to maybe try and fade it into these resistance levels and try and nick a bit off of the top. And maybe look to buy on a dip down to these sorts of levels on a retracement. What else was I keen on looking at? Oh, it's Aussie US dollar rallied into some really important resistance levels here. I've got a big cluster of resistance that I've got drawn on the chart, but also importantly, this previous swing high from the 3rd of September, we've hit that pretty much to the tick. So that looks quite interesting for me. Again, volume sliding off from the big spike that we saw here down at these lows. Has it got the legs to continue and break above this today? Not really sure. It's kind of into the neckline of this head and shoulders top pattern, but arguably forming a different type of pattern here for a reversal higher. So quite mixed, but into these resistance levels here, I think risk reward favors a short trade to the downside playing out. So I'll look at that in a moment for my gun to the head trade. Looking at dollar yen, that's stalled into this major resistance level going back all the way to October 2018, and before that, when this level originally started back in May 2017. So a bit of stalling, a bit of a reversal taking shape today, primarily being driven by dollar weakness that we're seeing at the moment rather than yen weakness, which has been very prevalent in the very short term. So that will do for the FX roundup today. Let's have a look at the gun to the head stuff from yesterday, shall we? Steve, you mentioned gold rallying overnight. You went short yesterday, but the move didn't really kick in till sort of midnight last night. So you actually managed to make a couple of ticks on that, 0.23R. I was offside on New Zealand dollar, US dollar by 15 ticks or 0.37R. So roughly cancelling each other out. Bit of loss on the day, but we'll go again today. I will dive straight into my idea just because I kind of had it ready. I was looking at this Aussie US dollar trade. Quite simply because it's rallied into what I believe to be some significant areas of resistance. Although there's quite an impulsive candle that we're seeing today, the volume isn't overly supportive. What really caught my eye on the intraday basis is that already Aussie dollar has sort of completed its sort of full range, the average true range. It's trading. It traded just above that, and then at the same time posted this bearish engulfing candle. So, for me, I think we could see a little bit of calling off on that. So I'm going to try and sell it here at 74.66. I mean, I could go super aggressive and just call the top, but I'm going to give it a little bit of room. 74.90, and I'm going to target a move down to this kind of region here, which is at 73.81. So looking for 3.6R on that one today. I think that would nicely marry up with that trend line support from somewhere around there. Yeah, maybe just a bit under it. That's my trade of the day, selling Aussie US dollar. What do you got, Steve?
Well, I was actually going to go with Aussie US dollar because I quite like the analysis, and on the short-term chart, it's hit the top of the ATR band. So yeah, I really like that. I had it all set up. I thought you saw it, and that's why you nicked it back from me. Well, you offered it up first, I suppose.
I didn't. Sorry.
Yeah, the only other thing I was thinking about was fading the DAX, getting short of the DAX, but I might actually go with you on the dollar front and look at which one was it? Was it Aussie yen? Aussie yen I was looking at. No, it wasn't. It was Euro Oz. There we go. Euro Oz. I'm going to go the same way as you, Joe. I'm going to selling Aussie dollar, buying euro, and just a straightforward 2-to-1 risk reward on this. Getting long here at 156, targeting a move to 156.51, stop at 150.
155.
75. Yeah, is that right? It just looks really odd, that number. I'm getting long at 156, so let's say 156 the figure. let's call that 25, and let's call that 675. There you go, 3-1. I'm being even more punchy. So
like
yeah, getting along, targeting 156.67.5, stop is at 155.77.5.
Okay, lovely. Good luck. Right, let's wrap this up then, Steve. So, housing starts and building permits is the only big data point out today at 1:30 in the US. Permits expected to fall 4.6% month on month, and starts are expected to have risen 2%. We have got Netflix earnings today and Johnson and Johnson in the States. So we're starting off into the tech numbers now, which is what everybody wants to see. I might even do a little bit of a video later on Netflix as a bit of a preview ahead of that. So keep an eye on the YouTube channel for that. Steve, anything further to add?
No, that's all good, mate.
Cool. Have a great day then, everybody, and we'll be back tomorrow.
Cheers.
Bye.